Hoje a gente vai falar com uma pessoa que trabalhou de perto com o que são os agentes autônomos aqui nos Estados Unidos. Então a gente vai ter uma conversa com ele, vai perguntar pra ele como é que foi essa experiência, né? E ele trabalhou por 15 anos, né? Então ele conhece bem aí da área. E ele também é meu professor de economia, né? Eu sou tutor da aula dele e ele tá me ajudando também a eu me transferir, também a eu conseguir trabalhos na área. Professor Franks, thank you so much for your time.
Thank you for having me. So, how's it going?
Going good.
Nice.
Very good, very good. Então fica até o final aí pra você saber como você pode se tornar um agente autônomo se você tiver na curiosidade aqui nos Estados Unidos. How was it in your mind that you said, okay, I want to go to the finance market? What was happening?
So back in the early 2000s, the hot market that a lot of students wanted to get into was finance. It was booming throughout the world, especially with the easy interest rates that were occurring, in the 90s, and a lot of individuals were cashing out equity from their homes. The financial markets were booming, and there was a huge demand for analysts to come in. I majored in economics, and my entire background is in analytics and economics. So my goal was, hey, go with the flow and get into that specific market. I actually got into buy-side economics by accident, which was a bit interesting. I started to work for a headhunter firm, and 2 weeks into it, I knew it wasn't for me. But I received a call from a company that I was later hired with, and they hired me. And I became an analyst, what they call like a basic productions analyst. I worked my way up to vice president of analytical research and products, or rather, analytical products and research. And I worked with an amazing group of individuals, creating audit tools, peer-based tools, etc., that are used by close to 200 buy-side firms in the world. So these are the firms that handle your mutual funds, pension funds, yeah, that was pretty much it. So that's how I got into it. It was a very interesting way of getting into it. I learned a lot of coding, but I also had to learn or apply some of the base knowledge that you would learn in the finance course. So.
Nice. Mm-hmm. And I see that you were saying, I was studying economics. Mm-hmm. Now going to the next question, what does a person that is gonna have the job that you had, what's this person gonna study? Is it economics?
Yeah, no, that's a great question. So I always tell individuals, if you want to get into the financial world today, whether if it is financial analysis or analytics, or financial advisement, there are a couple of ways that you could get to it. I am a big believer in understanding economics with a strong financial emphasis, where let's say you cover derivatives, equities, the mutual funds, so what they would call the multi-asset realm. That's a very important thing. But also to understand, let's say, the market structure that you're in. For example, in the United States, we're predominantly a monopolistically competitive market. But we are also dominated by extremely large companies that have a lot of what they call market power. And I say that in terms of the financial markets. Understanding some of the base components of economics, liquidity, supply and demand, and also understanding cost structures, that will really help individuals understand the current market play that's going on in an economy, and then also understanding the financial side. For example, what sectors are doing very well. For example, if you have a period of high inflation, people still have to eat. So companies that are more consumer-oriented, Campbell's, that sort of thing, they will still have some growth, whereas other companies may not, because again, they are staple products for the consumer. Understanding that delicate power play between the two really allows individuals to get a head up in pursuing a career in such a field. Once they're in that field, or once they start to get into that field, I always recommend that they try to find a company that will sponsor them and when I say sponsor them for, again, in the United States, but throughout the world, they have various degrees and various certificates but going back to the US, in terms of what they call the FINRA certification. And there are really two basic certs that people need to be a financial advisor or involved in finance, and that's the Series 7 and the Series 63. Once you have those two, that gives you a huge leg up, not only within the company that you start off with, but you could also go to other companies as well. If you're interested in becoming an advisor, so a financial advisor. Now, again, financial advisors, these are individuals that will sell products to the customer base. Let's say like myself to a family or that line. I always recommend that they try to get a master's in finance or an MBA. But I always say master's in finance will probably be more beneficial. And then from there, apply for a CFP. So that's a Chartered Financial Planner. That will definitely get you in, because the CFP program gives you a bunch of introductions and really case studies of what the common, let's say, laws are, what are the common calculations that you need to use, etc., to go out and sell. If you want to go into the analytical side of finance, I am a big fan of financial economics, if you get a master's with that emphasis at minimum, because from there you will have a lot of useful information that can get you towards what they would call a Chartered Financial Analyst, a CFA, which is a technically 2-year, but it could go out to 3 years. There you do need sponsorship from a company, but what happens over there is a whole slew of opportunity can really open up, because you can go to any type of company that needs financial assistance. So that's the typical route that I would recommend for individuals that want to get into that field.
How much does a financial advisor get paid? How is it like? Because is there a salary? You mentioned they sell, so they get a fee from
that's a really complicated question. You can make anywhere from, let's say, ballpark it to $60,000 US up. So there's no real limit. It really depends on a couple of factors. If you are, let's say, selling product, your big thing there will be your network, who you know, how you know individuals, etc. Because from there you get some form of a commission pushed back to you. And of course, the larger your base, the more your commission. So that's that. If you are going into financial analysis, now here I can't talk about the sell side. I came in from what they call the buy side. So again, these firms that handled mutual funds, pension funds, so they traded their own on the market. You will probably be making high 5 figs, so I would say 80, definitely on up. That specific sector, you are going to be doing a lot more analysis in terms of what they call transactions cost analysis, algorithm analysis, reversion pricing, order block trading, and a lot of coding there. So there's a lot more coding involved. So it's a bit more technical. That specific, if you want to get into that route, you're going to be, I still recommend the the financial economics, but there you definitely want to have a bit of coding experience, whether it's Python, R, SQL is a big one. That one's a very good one. And I mean, from my experience, it's a bit more, if you're more of a technical person, it's a bit more interesting. Whereas if you're more of a social individual, the advisor route, because you get to meet people, you get to talk to individuals. So it depends more on your personality. Yeah.
Vou dando uma pausa. Se você tá gostando até aqui, então dá um like, se inscreve no canal pra você não perder nenhuma notificação quando sair vídeos novos aqui, beleza? The next question I have for you is related to the last one, as you said. If you're more of a social being, then maybe an advisor, because you're gonna talk to people. What's the routine? Because you said there are two specific jobs in there: the analyst, and the advisor.
I see. So what happens is when you talk about the training process, okay, the training process is.
And what is the routine? Because you're gonna explain them.
Sure.
So, and what is the routine, like the day to day?
In the training process itself, so the execution of a trade, you typically have a portfolio manager have a bunch of information fed to them from his or their analysts, and from that they will contact their trader or traders that work for them, and the trader's job is simply, and again, I'm oversimplifying here, execute the trade at the best possible price. And they use various tools, whether they use dark pools, whether they use the lit market, as they call, that's up to them. That's also up to the company that they're working for, what type of, what kind of a company they are. So that's that way. And throughout the day, for those types of analysts, it could be a bit varied, but you're going to look at the sector that you're assigned, or you're going to look at the requests that are coming in from your portfolio manager. And from there, those analysts, they could do whatever they need to do, whether they do some market research through Bloomberg terminals, or they look at their own data sets and do their own trend analyses, etc. The same thing with the traders. Traders will typically be, let's say, audited to say, hey, how good was their trade? And what they say, this was their pre-trade analytics, so this is where they think the market was going, this is what it should cost. And then their at trade, that's their instantaneous effect. There they want to have what they call transaction costs that are very tight. And then their post-trade after the fact. How did they perform? That is what we would say is a classic buy-side analytics job. The other side from a financial advisor. Now again, it depends on the type of company that you're working with. Typically, if you are just starting out as a financial advisor, you typically go with what we would call the passive funds. So that's something that is automatically adjusted by some algorithm that tracks, let's say, the S&P 500 or the Dow Jones or some type of index. From there, if you are more actively managed, depending on your position as the financial advisor, you may have what they would call your own GUI. So you have your own graphics user interface that contains information from your firm, trends, etc. And you can call up your clients and say, hey, this is what I'm seeing. Do you want to modify? Do you not? I recommend this, I recommend that. Or a bit more traditional would be you have a group of, let's say, analysts, etc., that are feeding you information about a specific sector that you're considering. For example, if you are a person that is very interested in the EV market, you are going to be looking at the lithium market because they supply lithium. That's the big driver. So you want to see where is that market going. And you don't just want to look at lithium as the asset, but you also may want to check out the mining companies that are going into it. You want to look at what they would call the complementary market around EVs. That type of analysis can help the financial advisor better prepare their recommendations for their clients. But it also depends on what type of risk factor that their clients are considering. In buy side, the biggest concern is liquidity. Keep the market nice and liquid. And on the advisor side, it is really to get as much return as possible for the client in a what they would call a low-cost manner. But within that, of course, each client has different risk factors, different risk, what we would say, needs, if you will. And if that's the case, again, it could vary from client to client. I always say that financial planners or financial advisors have to be fairly well versed with the overall market, or at least very well versed with the primary products that they're selling. So if it's passive and they're saying, or let's say mutual funds for health industry, they need to understand the big players of the healthcare industry. If they are more durable goods, they have to understand the key players in the durable goods market, or if it's tech, the big players in the tech market. And the proper manner to do that would be within each of those products that they have, take a look at the stocks or the equities that they have and really understand what's going on in that company. So that's the, I would say, the day-to-day, the actual day-to-day. Most people, quote unquote, when I was in finance, I was typically in the office between 6:30 and maybe 8:30 Pacific Standard Time. There were days when I left at 3 o'clock when the New York market closed. There were days when I left at 10 o'clock at night. That's kind of the day-to-day. Financial advisors, that one, it depends. That's fairly varied, especially if you're going to be going out meeting with your clients. Yeah. So yeah.
Sounds good. Sounds good. Any comments, advices on people that want to pursue this career?
That's a good one.
Let's say if you could give one advice.
I would say if you want to get into finance in general, be comfortable with quant. Understand some quantitative processes. The math you have to be understanding too. And the other big thing is not to have tunnel vision. When I say tunnel vision, don't be solely focused on, for example, the end goal. There are a myriad of ways to get around it. When I say that is, for example, if you want to execute a trade, sometimes it's better to take a short-term loss than a massive loss. So you want to find ways to minimize everything. So critical thinking is a very important factor when you're going into finance. It's not just running some code or executing a trade and you're done. Anyone could do that, but the ones that really do well are ones that understand what the customer is leaning towards, what their challenges are, and being able to think outside the proverbial box. Without that, there's a huge issue with categorizing all of your, let's say, your business practices into just one basic strategy. And that's where people tend to lose customers over time, not taking into account the diverse, let's say, effects, or rather, I take that back. Let's say the diverse outcomes. I even scratched that too. Damn, that's a damn good question you asked me. Because I would say, well, let me think about that. No, because I got into finance, again, it was somewhat by accident. What I found, well, actually, no, I'll tell you what I did was, I bugged
Do you want me to ask the question again so you can?
No, I know it. I bugged the crap out of my bosses. I did. I always asked my first supervisor in finance was a coder, and I would bug this individual constantly. And one day he sat me down and he showed me how to code. And I was asked to do just some basic analysis, find some bad trades or whatever. And rather than using the software that was already readily available for me, I used that code that he taught me. It was faster, it was more efficient. And allowing myself to make mistakes, because I made a lot of mistakes along the way, it made me more resilient because I understood what variables in the market I shouldn't worry about, what variables can cause issues, and then understanding the end goal, which was, again, completing a trade at reasonable to no cost. That allowed me to, and I'd say this to all my students, by thinking outside the box and making those mistakes and allowing myself to kind of be outside of just this tunnel vision, that makes you a better analyst. That makes you a better advisor. And I mean, again, I was more in the back office. So making mistakes left and right, fessing up to them, that made me a better analyst in the long run because I was able to find the issues faster, find the quirks in the data faster, find what my client was really looking for. We've had clients that wanted some basic analysis that we legally were unable to provide, but we were able to kind of think outside the box and create a proxy for them. They signed up very quickly afterward. And this was a multi-billion-dollar client. So I think that's the big thing, is being able to think critically, think outside the box, be comfortable with making mistakes, but also be comfortable with some of the math. Not crazy, but just a little bit with it.
Just a little bit.
Yeah.
Nice. So know your math and think outside the box.
Oh yeah.
That's good. That's good. Professor, thank you so much for answering those questions.
Sure. So, and thank you for having me.
Nice. Espero que vocês tenham gostado. Até o próximo.